Good afternoon, friends. In the YouTube channel Advocate Amit Kumar Gupta, today I am going to discuss a very important case on bad debts. The name of the case is K. Patel International versus Assistant Commissioner of Income Tax, and this case has been reported in 96 ITR Tribunal Short Notes, page number 71, and the matter has been decided by Surat ITAT. The judgment of this case came on 1st June 2022. The facts of the case are like this. In this case, the assessee gave advance to its vendor for the purchase of goods. But after a long pursual and after the repeated pursual, the vendor didn't supply the goods to the assessee, nor assessee was able to receive back its advance from its vendor. Ultimately, the assessee do not have the option other than writing off this amount as bad debt in its books and claims it as an expenditure under section 36, subsection 1, clause 7. When the assessment proceedings were going on, the assessing officer inquired from the assessee and asked for the ledger account of the vendors of whom the assessee has claimed bad debt. When the assessee produced the ledger accounts, the assessing officer said that this amount cannot be claimed as a bad debt. According to the assessing officer, the amount can be claimed as bad debt only if the assessee has sold goods first to the customer, and then if it is not recoverable from the customer, only then that amount can be written off as bad debt under section 36, subsection 1, clause 7. This was the interpretation of the learned assessing officer. But the point of the assessee was that I have given this advance as a given this advance to the vendor for the purchase of the goods. This is my business expenditure, and because I am not able to receive either the goods or the amount back, so I am entitled to claim it as bad debt under section 36, subsection 1, clause 7. But the assessing officer was not impressed with the point of view of the assessee and disallowed the bad debt claimed by the assessee. The assessee went to the CIT appeal. The CIT appeal was also of the opinion that this amount cannot be claimed as bad debt under section 36, subsection 1, clause 7. The assessee also kept one more point of view before the learned CIT appeal, that this amount can also be allowed as a deduction under section 28, because section 28 says that for computing the business profits, all the eligible expenses should be deducted and only on the balance amount the assessee has to pay the tax. But on that point, the learned Commissioner of Income Tax Appeal said that because this amount has been written as bad debt before 3 years, so this amount is not deductible. It may be that in his mind, the point was that because this amount is before the 3 years, before the limitation period, so still the assessee has a chance to recover that amount. But the learned CIT appeal was not right in his approach, because the point of view of section 36, subsection 1, clause 7 is that if the assessee feels that this amount is not recoverable, so at that point of time the assessee can write it into his books as bad debt. He has not to wait for the 3 years, because CIT appeal also didn't give relief to the assessee, though. So the assessee approached to the ITAT, and the ITAT said that assessee can claim bad debt for the advance paid for the purchase of the goods under section 36, subsection 1, clause 7. There is no perversity in claiming the amount as bad debt into the books of the assessee in the current financial year, and there is no requirement of section 36, subsection 1, clause 7 to claim bad debt that first the assessee should sold goods to the customer, and then if that amount is not received by the assessee, then the assessee can claim it bad debt. So this is not the mandate of section 36 subsection 1 clause 7. So in this particular case, the ITAT gave relief to the assessee for the bad debt written off by the assessee for the advance given to the vendor for the purchase of the goods. Friends, this case is very important in dealing with all those cases in which the assessee is not able to receive either the goods for the advance given to the vendors or the amount which the assessee has given to its vendors. At the end of this video, once again I am repeating the name of the case. The name of the case is K. Patel International versus Assistant Commissioner of Income Tax. Thank you, friends.